Guys, welcome to my first ever YouTube video. Yes, sir. I'm super excited, super hyped for this channel because I see like a great progression in this channel. I feel like a lot of people gonna learn from this channel, you know. So I'm just like I decided to start up this YouTube channel based on the fact that a lot of people out here putting out a lot of contents that are not really helping out people. So I started this channel as a way to be able to reach out to the public, to give out my own aspect of the market, of how I've been trading the market for a good couple of years right now, and I've been profitable at it. So I hope whatever I'm teaching on this channel, people will gain value from it, people will tap in with me, and people will be successful because we can clearly see nowadays a lot of people be losing their jobs. Like the regular 9 to 5 is not cutting it no more. I'm not saying not cutting it no more for you to live a lavish lifestyle, but it's not cutting no more to even live a day-to-day lifestyle. Like we're not even talking about living lavishly, we're not talking about living elite or top tier. We're just talking about living a regular day-to-day lifestyle, and we all can clearly see that. Okay, the bills are being packing up, the paycheck is not hitting no more. We're getting into a recession, so it's high time we learn a skill set that will help at least put a couple of hundreds in our pockets, or maybe even thousands, where we become good at it. You never know what tomorrow holds. So but today, it's not gonna be too much about an educational video. There's gonna be a breakdown on how I was able to make a profit of $30,000 on trading EA. So $30,000 wasn't accumulated over a day. This was basically a swing trade where I have been able to accumulate over, I think, about 309. Let's say if you put it back up, 279 pips so far with 2 entries. I'm currently having the third entry right now, but it's in drawdown because it's not doing as good as the other entries. But I'm gonna tell you guys why I took these trades and for what reason that made me take these trades. You know what I'm saying? Like why I kept on holding the trade. I'll tell you why I took a trade and why I kept on holding the trade. So this trade started off as, in trading, as traders, we number one thing, you want to know where you're at in the market. You want to know if you're in the buyer's market or you're in the seller's market or you're in the consolidation market. When you want to know if you're in the buyer's market, you need to understand the trend first. And in this position, how do we understand the trend? Is by looking, there's only one way we identify the trend. By looking at the market now, we see clearly the market is making higher highs, higher lows, and higher highs. So the reason why we know in the buyer's market is because the market is pushing up bullish and it really broke structure right here. It created structure down here, right down here, broke structure down here, and then kept on pushing upwards. And I felt like it was more in a bullish aspect because he had clapped all this consolidation area right here that it found it very difficult to break in the past, which was around 1.56081. That's a pretty strong resistance zone right there. I mean resistance line where price couldn't break it. So we see that okay, we in the buyer's market, then we see we're slowly transitioning. The market gives us a higher low. After a higher low, we all know, but after a higher low, the next thing we're expecting is a higher high. So in this case, the market failed to give us a higher high, and the market we're expecting now, okay, market failed to give us a higher high. The next the market has to give us is another higher low. So structure will just be really little around this point, like just playing around. So structure came and gave us a miniature higher low again, but didn't give us a higher high. It's a higher low because it's higher than this previous low. Though the market gave us a lower high, yeah, I'm expecting a lower low. The market didn't give us that, they gave us a higher low. And market structure now became created right there, which was a double top break retest. And market dropped again, retested still, and market dropped one more time. I'm not gonna lie to y'all, on this trade right here, I had taken a sell of this bearish engulfing after it broke and retest again. I was like, okay, I'm gonna take a sell. I'm gonna sell it to like down here where when the market had like a little delay, like right there. But market didn't go that low, so I didn't like. First of all, I was selling to buy because if you look at the market on a 4-hour time frame, right? On a 4-hour time frame, looking at all of these, like the market, like I said, it transitioned. The market rejected off this level, This beautiful. My black lines are my daily support and resistance, while my red lines are my 4-hour support and resistance. So on this level, price rejected off this in between the daily and the 4-hour support and resistance and pushed up. When it pushed up, you can see it broke 4-hour structure. It broke all these highs right here. So what I was expecting for price to do next, it was to sell to buy. So I had drawn my FIB from the low to the high. That's how you draw your FIB in a buyer's market. So I was waiting on seeing where price to react off from. So my main areas I was looking for price to react off of for me to take a buy was a 38% and 50% most likely, because there was an area of confidence around it. Even around the 61% could have been good as well, because it was all like support and resistance areas around there. So it makes it a little bit more, the confidence is more greater, and like it makes the probability a little bit more higher. But as price kept on approaching each FIB level, it wasn't giving me a bullish price action. I wanted this standpoint, but it did give me a bullish price action here, which was this very bullish engulfing. I did take a buy off here, but at the same time, when you're taking a trade as a trader, you need to know your entry and your exit points. So even though that wasn't my exit point that I wanted it to go, because normally we all want to be in a trade where the market gives us a lot of pips. We always know that's the thing about us as traders. We kind of selfish times when it comes time to time. So in this situation, I was looking forward for price to give me a big ass push up to the upside for the 4-hour time frame sell to buy, because you can see how the move is going down. It's like a correctional move. It's moving slowly, so you feel like, okay, we're still in a very much buyer's market. But when I drew this my supply zone off here, and the price came and reacted off it on the lower time frame, on the 15 minutes time frame, with this bearish engulfing, I knew that was it. And also, I think fundamentally there was a reason. I don't know if this first entry was held fundamentally. Let me go ahead and make sure about that, because I know the rest part of the trade I did hold it because of fundamentals, but I just want to make sure the beginning of it was the fundamentals. So it was like on a Monday, January 23rd. So let me see something. All right, this day I didn't enter and held it for fundamentals. It was still the next day on Tuesday, while I added other entry and kept on holding it because of fundamentals. So yeah, this first day I didn't hold it because of fundamental on Monday. It was on Tuesday where the odd CPI news came out, and it gave us a good forecast, so making odd initially stronger, and so making and structures really on the downtrend. So you already know if odd is getting stronger, we're selling some more, and that's how it went. And I got this first entry, I kept on holding it, and it started consolidating. And you already know that as price action trader, mostly when price is on the downtrend and in the sideways movement, there's a higher probability of price breaking to the downside. There's a higher chance of price breaking to the downside instead of breaking to the upside. So that's why I kept on holding this trade. And yeah, so that buy signal failed to happen. And as traders as well, you need to always have you don't need to have a biased mindset. You need to have a flexible mindset to always be like, okay, this should happen around this area for me to do this, and this should happen around this area for me to do this. So when this happened, I just literally knew that, okay, my buys were over. I wasn't forcing it. You need to understand that as Forex trader, we make money by buying and by selling. So you always want to be in that direction with the market, and you always want to understand that you don't need to impose your opinion on the market. But as price action traders as well, you always want to make sure you see that price action clearly before executing your trades, because that's how you build your BD system, and you're comfortable on increasing your lot size as time goes on, because that's how you become a better trader, by being sure with your strategy and increasing your lot size. It's not like you be catching 100 pips move always. Now, some people make money off this market by just catching only 20 pips on the daily. It's just because their lot size are just freaking insane, where they make a lot of money from it. So this was it. Got it. Kept on holding my move after a strong impulsive move. I was kind of skeptical to hold it because I felt like a correctional move will happen to the upside, like at least like 7-8% for the sell. So I was like, nah, but I just kept on holding it because you never know where the big gains will happen. So price broke, retested this next 4-hour support turn to resistance. It broke my support turn to resistance. We tested it, sold a little bit more, gave it more price action again, which was a rising wedge or a rising channel, most likely not a wedge, I'm sorry. So a rising channel, broke that channel, kept on selling. So this is just lower time frame analysis, but overall it was how structure transitioned and the reaction of this supply zone, and the market kept on selling and pushing downward strongly. Came again, retested, sold, channel, sold, just like that. And when it came back here and retested again, gave me a rejection candle, right here, and all of these, and a bearish engulfing. Okay, not a bearish engulfing, but I need to give me 3 bearish candles in the line. I was like, okay, I'm gonna just enter for myself, put my stop loss around here, and that's why I got into the trade. It's just about knowing what direction or structure you're in. Market just started giving lower lows and lower highs, and that's how you just get into the sales at the lower highs, and it's taking you to the lower lows. So my perspective right now is this on the market, and that's what I'm currently now. I'm on a UCAD trade, which I've been waiting on this zone to get broken for a period of time. I'm in a sell. My stop loss now is in profit, so this will have my outlet right here to let me know if it's approaching my stop loss in profit. So it's just about knowing what direction we are in the market. Like, you need to always know what direction of structure you're in the market, and you also want to know what phase you're in. And one thing about the retracement phase could always potentially lead to a reversal phase. That's why me per se, I do not do past 38% when I'm in a trade. If a trade is putting back more than 38%, I will get out of that trade, because I don't want to hold a trade and it goes 38% before you realizing you lost 7-8, you lose 7-8% because you were holding past the 8% retracement. I don't do that. Me personally, that's on me, and that's how I tell my students, that's how I tell people that ask me for trading advice, because that's something I have been doing and it has been working for me. So that is basically all about this trade. It was all taking off a supply zone, break and retest, confirmations, and more confluence when it came to fundamentals, where odd CPI news was released and it came out in the favor of odd. So knowing that it's gonna keep on pushing odd to the downside, it's gonna keep pushing your AUD to the downside. So that is how I was able to make a 30K profit, though I didn't close it. I had a floating 30K profit, but I didn't close it at 30K. I closed at like 20 something, and yeah, because I get some of the money back to the market. But that's no problem. I could keep holding this move. You never know. It might be a 50K day. You never know where this E is going to. You never know how far it's gonna melt. So I just have my eyes on it. So if you guys want to see like a screenshot or screen recording of the profits, you go ahead and follow me on my IG page at I_boss_bossmatweedy, or follow my success page at ppontus120. I'll be dropping some tips there as well, and also I'll be dropping some fire trading tips on this channel. So you guys make sure to click, smash the subscribe button, hit the notification bell, and stay tuned, because I'll be giving you some fire sauce how you can become profitable traders. I'll be dropping sauce on psychology. I'll be dropping sauce on on trading strategy. I'll be giving all the advice that you need out here on trading on this channel. So you guys please do hit the subscribe button, share the channel to your friends struggling with trading as well. Let them know that this is an upcoming trader. I'm not an upcoming trader, just that it's an upcoming YouTube channel with great sauce. So thank you guys one more for staying to the end of this video. See you guys on the next.